Today in the grain market, soybeans were up. Those futures did break through a significant resistance level, pushing the market up. We had a 40-cent range today and really kind of broke out of that 4-week channel that we've been in. Fundamentally, there isn't really much to hold the market back from continuing to rise right now. Only February 24th did it even trade higher. So it seems like now that the target is going to be 17.59 and a quarter. Before we make a new high, and that seems to be just a stone's throw away at this point. The option open interest is highest at the November $15 strike with 15,000 open interest, which I think is pretty interesting and significant. The July $10 puts on the downside has the most open interest with 10,000 there. So right now the C-val for soybeans is 26.7%, with the soybean oil still at pretty high at 37.6, and the meal at 29.9. Corn also was higher today. Energy markets are facing like a challenging time, and this uncertainty is supportive with regard certainly to the ethanol market, and that's giving some support to the corn. There is some dryness in southern Brazil. Also, however, the second crop seems to be doing pretty well for corn, and I think that that's why that's kind of tempered the market now. But the futures are above the channel, and they're pushing back to that 782 3/4 high from back on March 4th. So again, we're starting to kind of break out of these channels and start to move to the next level, and then that's what we see would be the target going forward. The option open interest is growing in the May $8, but overall the DEES $8 strike has the highest open interest in options with 24,800, which is significant, and there's plenty of activity also adding to the $8.50 strike on December 2, so that's something to watch going forward. The C-val for corn is at 43.9%, still very, very strong. Now today, wheat was steady, not much really happening. It's kind of traded on both sides of unchanged today. Consolidated trade, the 38-cent range. Concerned about the spring planting in Ukraine is beginning to ramp up. The current guess is that the acres will be cut by 50%. So that is super significant right now, but it's still kind of up in the air, so we're not really sure. Prices are hanging around above that $11 level, so I think that that's relatively strong. The option open interest had a big increase in that $13 call, as now it's up to 10,000. And the $14 call is at 11,000. Now this is in the DEES contract. I think that's significant. The July $20 call actually added 1,000. So there's 1,000 open interest July $20 wheat call. That is significant. And Kansas City and the Minneapolis wheat also trading about the same right now, kind of moving sideways. The C-val has come down a little bit in wheat again, but it's still 66.5%, which is at any other time would be a whopper of a number. Now, planting intentions are coming up next week, so that's going to be very interesting and something to watch as we go forward.